We just heard Adam talk about some analysts being cautious on Google. Joining us right now from San Francisco, Aaron Kessler, analyst with Kaufman Brothers. And Aaron, you heard what Adam said. You're one of those 34 analysts who have a buy rating on the stock. What do you see in Google that these other analysts that are kind of expressing some words of caution don't?
Yeah, so for the quarter, we're expecting roughly kind of 5% year-over-year growth and flat on a sequential basis. I think the key thing to keep in mind is, one, you're seeing obviously a kind of a once-in-a-generation economy. And I think if you look out to next year on a more normalized growth basis, we're looking for about 15% revenue growth. Part of the impact this year is from the foreign exchange impact, and international is still growing about 20% year-over-year. So we think as you look out to next year, long-term growth is kind of 15 to 20% for Google. And at current multiples around 19 times earnings, we think that's pretty reasonable given that growth rate.
Safe to say, I mean, Adam kind of broke down all those kind of staggering growth rates. I mean, Google kind of transitioning from being kind of a young upstart to being a more established tech player here. And so maybe you should expect those growth rates to somewhat slow down.
Exactly. I mean, the rule of large numbers says that the growth is going to slow. Obviously, it's slowed more this year due to the economy, with roughly flat growth in the U.S. But we still think U.S. growth can be 10% plus over the longer term, with international growth of 20% plus. And so, obviously, this year it's being impacted, but we like the stock longer term, and we think the growth reaccelerates in the back half of this year and into 2010.
Aaron, one other thing we're keeping a watch on is kind of the battle that seems to be brewing between Google and Microsoft. Let's talk about Google. I mean, do they need to keep a close watch on Microsoft's search engine, Bing?
Yeah, clearly. I mean, it's still too early to say whether Bing is gaining any meaningful share. We haven't seen it yet. But I think Bing clearly has a nice interface. We don't think the search results are at par yet with Google. But it's really going to be determined by the users, and we're going to be watching the traffic data closely. And Bing only has about 5% market share right now, so it could be easy for them to gain more market share over time, and Google has about 65% market share. So it's still too early to tell, but that is something we'll be watching closely.
When does Google have to be worried? What kind of market share would you have to see in Bing to say, whoops, the game is changing here?
Yeah, I think you would have to see Bing get into the double digits. I mean, if they gain 1 or 2%, not a big deal. But if they start to get 10 to 15%, then I would have to be a little more cautious in terms of Bing's ability to gain market share.
What about Google, announcing plans last week for another operating system? It already has one that runs on PCs. I mean, what's Google up to here?
Yeah, I think it's just another way for Google to expand its brand. They're in a lot of areas besides search advertising, with the Google Docs platform, emails gaining additional market share. It's just an additional way for Google to add to the stickiness value of their website and encourage users to use more of their services. And ultimately, that just drives more search volumes and advertising dollars for Google. And they can afford to create new products and not charge a lot for them, given their strong presence in the search market.
Aaron, 2 operating systems, though. Is it a confusing strategy? And I only bring that up because CEO Steve Ballmer over at Microsoft, he said it's rival strategy, meaning Google is confusing. And he was specifically addressing, Google kind of having 2 operating systems, or the prospect of having 2. He says, I don't really know what's up at Google. Does this, though, strategy by Google, 2 operating systems, make sense to you?
Yeah, I think an operating system for Google, it makes sense to maybe go into the netbook market, where it's obviously netbooks are a fairly low price, say in the $300–400 range, and people don't want to pay $40–50 necessarily for an operating system for a netbook. And so that's a very attractive offering for a netbook. And the primary use of netbooks is obviously to get online, not to have really robust processing power. So I think it does make sense on the low end to have an operating system by Google.
All right, Aaron, another big tech story that we've been keeping a watch on is Amazon and Netflix. Anything to the speculation that Amazon.com may indeed be interested in buying Netflix? What do you think?
Yeah, we don't think so. This rumor has been around since about 2004, and the key reason we don't think it happens is Amazon, we think, would have to pay taxes if they acquired Netflix. Netflix has distribution centers in most of the states in the U.S., and if Amazon were to acquire Netflix, we think they have to start to pay taxes, and we don't think that's a very attractive proposition for Amazon today.
All right, what about another suitor for Netflix?
Yeah, I think Netflix continues to be very attractive. The question is who. I think it's Netflix has they're continuing to execute very well right now. It could be an acquisition candidate, but there's no clear suitor in the market, we don't believe, right now.
All right, we're going to leave it on that note. Aaron, thanks so much for your time today and breaking down a lot of these big tech stories that are currently in the news. We appreciate it. Aaron Kessler at Kaufman Brothers.